How do I get off camera?
Yeah.
So Amy, you want to try to just hang up and
Yeah,
see
I'm
if
fine. Okay, well, yes.
everyone say hi to Amy. She's usually behind the curtains. Brian, we always give people a couple minutes to log on. So
Yeah.
Yeah, give me a minute to get off here.
So everyone that has already joined while we wait, Amy and Faith are in Scottsdale doing pre-planning. So we had a very important discussion while Amy was letting us into the show about golfing on Saturday. So I love when people's note takers join, and I don't know about Ed and his note taker if Ed is on, but a lot of times I see people join, their note taker joins, but they don't join. And then it happened to me last week. I had declined a meet. I didn't decline the meeting. I just had put it as tentative. So my note taker showed up. So one of my industry friends called me out on it.
Just sending AI avatars to meetings.
Yeah, yeah. Hey, we have always looked for a way to clone ourselves so that we can be more productive. So I guess that's the closest thing that we get. All right, we'll give everyone just few more seconds. We'll wait till 2:02. There we go. There we have it. So, hello, everyone, and welcome to the SIP. This is where conversation sparks connection, collaboration, and drives progress, and industry leaders come together to share ideas, tackle challenges, and inspire change. Think of it like sitting down over your favorite cup of coffee or adult beverage. It's casual, it's energizing, and it's packed with insights that move us forward. At the Mortgage Collaborative, we're all about creating a space of innovation, growth, and meaningful impact. And today's episode is no exception. We are diving into real world strategy, success stories, and the kind of dialogue that reminds us why community matters. So, thank you all for carving out the time from your busy days to join us. And today's show is proudly sponsored by Reggora, and I'm thrilled to be joined by Brian Zitten, CEO and co-founder of Reggora. Welcome, Brian, and thank you for being here.
Yeah, thanks for having me, Jody. Appreciate it.
Awesome. Before we dive into Reggora and the platform, we're just coming off of MBA annual. And I wanted to, first of all, say thank you to Reggora and your team for hosting and joining us for a dinner on Monday evening with some of our members. It really was great food and conversation, and it's a fantastic way to connect and hear the voices of the industry in an intimate space. So, what were your biggest takeaways, or your team's biggest takeaways from MBA, and how would you describe the overall feeling of the mortgage industry this year compared to last?
I think it was pretty positive. Someone who's more of a veteran than me said it funny. He said that Um, yeah, the joy at the Mortgage Bankers Conference is always inversely correlated with where interest rates are on any given year. So it seems like compared to the previous couple of years, obviously people are in better spirits. But yeah, we had a ton of engagement, a lot of traffic. I think, people were more heavily attending and getting involved. So yeah, it was all good.
Yeah. I definitely think that the overall temperature was much warmer than it was last year. I think we as mortgage lenders are always cautiously optimistic. You know, a new year brings newfound energy and people are optimistic, but I do feel like it was a little warmer this year and feeling like, we really are. And I think it is because we saw a dip in the interest rates and people think that that momentum is going to continue. So I do think it was there. I was on another call today and we were talking about MBA and they were asking how like the event space was. And Mimi, who is head of partnerships, on Tuesday, she tracked 15,000 steps before she ever left the
Oh yeah.
hotel. So just during meetings. So it definitely increased all of our cardio and activity. from a space perspective, but it's always awesome to get out into the industry and be able to collaborate and have discussions with those people who are outside of our tight network, so that we can hear their voices as well. So overall, I would say the TMC team had, a fantastic trip to MBA. Also, had fantastic conversation with MBA directly, which was great. So we're excited coming off of annual. We're also excited to see the close of conference season so we can take a deep breath and hit the road again in February for 2026. So, but we can go ahead and dive into Reggora. So, Brian, your journey is unique, and I was fortunate enough to have met you very early on in your journey. But I believe that you started the appraisal management space before you even graduated college. So, tell us how Reggora came to be.
Yeah, it was an interesting, I think like most, I kind of stumbled into the mortgage industry. We did not plan to get into it directly, but essentially in college, my college roommate Will, who maybe some folks have met, he's my co-founder, he's the CTO. He's literally my roommate since like freshman year. He's always been like coding up random stuff. Senior year, we started our own real estate brokerage. And we used like an algorithm that would send out thousands of emails to all these property owners in Massachusetts and be like, hey, do you want to sell your property? Hey, do you sell me property? This was before I had any beard or anything. I looked like exactly like a 20, 21-year-old. So I'm not sure why, but we did end up selling about $5, $6 million worth of real estate using that throughout my senior year. And then as I'm giving a tour one day, in walks an appraiser with a clipboard, like the classic, very low tech sort of thing. We're like, that looks interesting. Running a brokerage is very tough. Um, and we were just like we were delivering zero value other than just spamming out, thousands of emails. So we said let's investigate appraisals a little bit. And so I started shadowing appraisers, dozens and dozens of appraisers, basically listening to all their problems, started talking to lenders. And so when we graduated, we took the money doing, that we had made from the brokerage and immediately started Reggora focusing on appraisals.
Would you say that from that experience of the appraiser side and the lender side, who at the time was most frustrated with the lack of technology?
I think that the lenders were more frustrated because the appraisal, I think, is viewed as like a, compliance necessity, right? And yeah, I think that people in general were just always looking to kind of make improvements. Appraisers have no, trust me, they will complain all day if you will listen to them as well. So, but I think that in terms of the holistic process, the lenders have kind of a more wide view of it all, and so, a little bit more perspective there.
Yeah, so Reggora is known as a modern appraisal management software, and I know that you have over 250 mortgage lenders. I actually was shocked to hear that appraisers will always complain because being a recovering mortgage lender, I always complain about the appraisal process and lack of technology. But tell us, for those that are not familiar with the platform, give us an overview of Rigor, what it does, and the problems that it solves in the industry.
Yeah. So well, to take a step back, yeah. So we have like 250 customers. It ranges from small local credit unions to some of the biggest mortgage lenders and banks in the country, right? And when you start processing hundreds or even thousands of appraisals a month, that becomes like a really difficult logistical thing to manage, especially if you're working with dozens and dozens of different AMCs or if you're working with, thousands of individual appraisers. And so our platform is basically the one centralized place to manage the full appraisal workflow A to Z. So everything from plugging into the LOS and getting all the data and docs, ordering, collecting the payment, scheduling the inspection, status updates, communicating with the vendor, underwriting the appraisal, like actually helping to review it, paying out the vendors, delivering the appraisal, like really the full thing A to Z, whether you're working with appraisers or AMCs or both, like we are kind of the central zone that all of that plugs into because on the other side, we have literally, I think 300 AMCs integrated and about 70% of the entire US appraiser population. So pretty much anything appraisal related we'll handle.
Right. We do have a question that popped up is I think it was John is asking if it also handles appraisal compliance.
Yeah. I think QC there, I see. And yes, so part of the platform is the underwriting module where we're extracting the data from the appraisal, running hundreds of rules against it to help streamline the underwriting process. Like if you have reviewers or underwriters that are just using like a manual checklist, this is the new age of that where we're using AI and computer vision and automated rule sets to eliminate a lot of the work that a human would have to do.
Awesome. And I wanted to, because I have known Brian almost since the beginning of the company starting. I don't remember how we met. I remember who I was with when we met. But fast forward a few years and I was working for a mortgage lender and we were working on getting our Fannie ticket. And Fannie came in and they're sitting in front of us, and we felt like we were very well prepared for the interview process. And we got to the question of how many AMCs do you have? And when I said we have 17 AMCs, the reviewer's mouth dropped. And I was like, oh crap. I think that we just like blew everything, no matter how well we did this. And I asked the question, I was like, why are you concerned about the number of AMCs that we have? And the reason that they were concerned is the ability to manage it and to be able to see that you have the rotation in the appraisers when you are having to manage across 17 different platforms
Hmm.
or portals or websites. And I had remembered meeting Brian in a Reggora platform. And I think I may have even called you that same day while the reviewer was in the office and like, hey, how if we were to put all 17 AMCs on the same on Reggora platform, would we be able to manage it from a reporting perspective as the same one? And it's like, absolutely. So we had the conversation with the Fannie Mae person that did field reviews, and that made it back to Fannie Mae. And I really believe that that was like a large piece of us being able to continue. And it was very early on. So, I
Yeah.
mean, early on there were problems. And I've told Brian this story before for the listeners. When there were bumps in the road and the loan officers would be like, why do we have to use Rigor? I'm like, all right, listen, we can either go down to 3 AMCs or we can use the Rigor platform. Which do you want? So it really helped me in the change management process. And I think that we were well over 20 AMCs because it was so much guided by as we were growing new branches coming into our lender to be able to do it. But I have to say, I really think that Rigor played a little bit of a role in the approval process. So thank
Yeah.
you for that.
Yeah, no, that is like a core use case for sure because especially the place that you were at, but there's very similar companies where you have a lot of IMBs that are very LO focused and you want to be able to accommodate, what the production folks want while staying compliant with appraisal independence requirements. And so you end up onboarding all these different AMCs, but you need some piece to actually make it work and not be absolutely crazy. But yeah, that was like super early days. I mean, I graduated in 2017. We raised our first round of funding January of 2018. We launched like the product fully maybe by the end of the year, early 2019. You guys signed on like,
Yeah.
number 4 or 5. So yeah, it's been quite the journey. I appreciate you dealing with the bumps in the road early versus now it's much smoother.
It actually worked out to my advantage because then I never had to say no to bringing on a new AMC. And even when there were bumps, I just used it again to my advantage to say, you have a choice. Like I don't have to feed choices from the top down to you. You can help make that decision. So it was awesome. And do you see that as being, I mean, that's a one use case, but are there other experiences that you're seing from lenders and why they're turning to you? Other use
Oh, yeah,
cases?
I mean, there's a million reasons. You have folks like yourself who it's a compliance thing, with appraisal independence. You have folks who manage a panel of appraisers directly and they just want to improve the efficiency, like improve the turn times, the automation. We were one of the first people to really do really in-depth LOS integrations. So instead of manually clicking, into all these things, we have a ton of automation when it comes to like auto ordering, collecting payments, QC, all this sort of stuff. So appraisal, it touches a ton of people, whether it's underwriting, they care about efficiency, production staff, they care about bar experience and turn times, ops, they care about efficiency. So there's a bunch of different use cases depending on where you sit inside the lending organization.
Is a question. I usually do a horrible job at this. I don't know why that I'm catching it today. Must be the MBA hangover. But does the platform send and monitor e-delivery?
Yep. At the end, once you get the appraisal back, we can automatically electronically deliver that to the borrower. It tracks all of the compliance because you need to make sure that they get it delivered within 72 hours of closing. All that sort of stuff is time stamped. Um, so yeah, all that's like table stakes functionality for us.
All right, awesome. So let's talk a little bit about ROI because every lender wants to understand the value. You've shared that Reggora reduces the cost per loan by $258 a file. How does that happen?
It's a accumulation of a bunch of different efficiency gains. We don't have to get like super in the weeds of all of them, but I'll give you a couple examples and people can extrapolate. Um, but there are like a ton of death by a thousand cuts things as it relates to appraisal. Think about just straight hard cost of what you pay an underwriter, right? If it takes them 30 minutes to review an appraisal and we could get them to review an appraisal in 15 minutes, we're improving the efficiency and labor costs significantly. Appraisal payments are a huge deal. A lot of people don't have a very automated way of collecting the appraisal fee. So they're running into issues with like redisclosures and change of circumstances and appraisal fee leakage. So like if they do a collect at close transaction because they couldn't collect the appraisal fee and then the borrower falls out, they're just eating that, right? So you have kind of underwriting efficiency, you have appraisal payment related items, you have accounts payable. Like today, accounting departments are spending a ton of time trying to reconcile, all these appraisal payments. We automate that, processing back and forth. So it's all these different things that add up to, okay, you're saving 20 bucks here, $30 here, 50 bucks there. That adds up on average, depending on the customer, anywhere from like, yeah, $200 to $300 per loan typically.
I want to like focus on one piece of that is on the accounting side of the platform. So it fascinates me why more lenders wouldn't jump onto the platform just for the opportunity for the appraisal payment reconciliation process and having a platform. I remember the accounting teams so frustrated with appraisers coming and say, you owe me money. And we're like, no, we paid that. And the whole, it's like, was like a full-time accounting position running around at a large lender to make sure that you weren't double paying for appraisals, that you had paid for appraisals. Is that due to lack of awareness of the accounting platform? Or, can you talk us through the accounting functionality, how it
Mhm.
works, just for awareness?
Yeah, for sure. And it is, I mean, we went from like 0 to 20% market share in like 5 years. So I do think it is, catching on pretty quickly. But yeah, I mean, most like there's a couple scenarios, right? Like you said, let's say you're working with all these different AMCs with maybe some other platform that doesn't process payments or just directly. These AMCs all have their own individual invoices. Some of them is plugged into the LOS, some aren't. The closing table doesn't always get it on time. People don't always disclose the fee correctly because there's always different fee schedules. So it creates all this kind of chaos. When you have payments baked right in, so this is like the most classic workflow for one of our customers. The loan is ready to get ordered. We have intent to proceed. They either hit order appraisal or it gets triggered from the LOS. Before it even goes out to the AMC or the appraiser, we send out a white labeled payment link to the borrower, and that link pulls directly from the fee schedule. So it's going to be the right fee based on the right product and city or whatever zip code breakdown it is every time. The borrower pays with a credit card, whatever. Payments collected, when the AMC or the appraiser finishes the job, we disperse the payment automatically. So all these vendors have linked their bank accounts to the platform as well. So we can automatically ACH them the money. No need to wait on the check, in the mail or anything like that. They're going to get paid within days. We also handle all the tax documents, all that sort of stuff. So it happens pretty instantaneously. It's all reportable within the system. And so there's way more scenarios, but that's kind of the most classic version of it.
And it also eliminates the need to collect borrower credit card information, which is a huge security concern on a lender's side.
Right.
So I'm glad we have the opportunity to move beyond that. One quick question in the chat, is the white label payment link personalized by the loan officer, or is it just by the lender?
You can customize it really granularly. Some people do it based off, like if you have multiple DBAs, some people do it based off of branch, but that, yeah, can be customized with like different logos, different email messaging. People will even sometimes, if on the wholesale side, will have it be white labeled to the broker. So it just kind of depends on the preference of the users.
So it does sound like that's possible. There is a white paper that you have that is titled True Change Requires More Than Technology. What does that mean to you? And can you give us the Cliff Notes version?
I mean, the Cliff Notes is basically, even if you have what I would maybe biasedly call the Ferrari of the appraisal platform, right? If you're not using all of the functionality, if you're not using best practices, you're not going to see the benefits. And so what, has happened maybe in the early days, and we're much better about getting alignment on, you can imagine a scenario like ops having this huge appraisal problem. They, work with us or some provider, oh, we're going to fix all this, but they don't include like any of the sales team in those conversations, right? And so they don't get buy-in. And so the platform specific functionality like auto ordering or payment doesn't get used appropriately, and they're missing out on some of those efficiency gains. So it's really about getting the right tech is step number one, and then using it correctly is also the next crucial step to making sure that you're actually doing it. And so having the right people involved with the implementation, I think, is equally as crucial.
Awesome. Thank you for that. And for the listeners, again, if you go on to Regora's website, you'll find the white paper. It's called True Change Requires More Than Technology. So you can search that out. There's been a lot of buzz around GSE updates and the uniform appraisal data set. And, with Regora, I'm sure that you're very attuned to what is going on. What's the roadmap that we can get excited about as additional solutions that Regora is providing the rest of this year and into 2026?
Yeah, there's a couple things. One is, earlier this year, later last year, we launched a repurchase warranty. So I was talking about appraisal QC. We put our money where our mouth is, and saying basically, if you use this QC tool with this warranty, we will literally take on the financial liability associated with appraisal repurchases. And so we're continuing to make tons of tweaks to that to make it better and better. Right now, that's eligible on like 60-70% of all conventionals. We just announced launching 24-hour appraisals, which are around hybrid appraisals. And, the GSEs just published in the Selling Guide a couple months hybrid appraisals. So offering fulfillment of 24-hour appraisals. You mentioned UAD. That's a huge initiative. There's a new UAD data set coming starting around this time next year. And so we're already on top of that, making sure that our lender customers will be able to smoothly transition into the new version of this stuff. Continue just day-to-day improvements. We do new releases every 2 weeks. So this is another main reason why we've done really well. Most of the people in the appraisal industry are not super tech enabled. They maybe make changes to their code like once or twice a year. They take forever to do feature requests. We're doing new stuff every 2 weeks. So our roadmap, we measure it in like months, not years, because we just have tons of new stuff coming all the time.
Yeah, and I definitely think in this environment with AI, things are changing so quickly. I don't think it's even possible to know what your roadmap looks like 90 days from now if you're trying to keep up with the amount of change that's happening within the industry. So I like that point. I like that you're keeping it narrowly focused in short term to allow things to change on the back end. So, Brian, anything else that you want to share with? We're currently with the TMC family, and is there anything that you want to share with them? This episode will go live at 4 o'clock Eastern time on LinkedIn. But anything else that you want the TMC family or the industry listeners to know about Reggora?
Maybe just a couple points in that I think that it's generally, it's funny because I was joking with someone about this at the MBA conference. Generally, most people know they're unhappy with their existing, providers, whether it's appraisal, LOS, whatever it is. People are always complaining, right? And usually the number one thing is, oh, we don't have the resources to switch right now. It's not high enough on the priority list, that sort of thing. And so usually, most of the time, we get engaged people like yourself who are in like an immediately distressed situation and you need a situation fixed now, right? Or people who are planning much further in advance, sort of thing. But I think people overestimate the actual amount of time it takes to get something like this done. When we sign a new customer, they are fully live on average within 45 to 60 days because we're integrated with all the major LOSs, Encompass, Dark Matter, Byte, all these different things. And so the appraisal upgrade is not this scary thing like you would maybe think in terms of an LOS, a POS rip out, something like that. And so that's maybe the one thing I would want to share is, you don't need to overestimate the cost associated with switching.
Yeah, and from the change management perspective, allowing the teams, especially the sales teams, to use the same AMCs or appraisal panels that they have been using in the past, they still have the same opportunity to do that. So it isn't like you're taking something away from them. You're just giving them a platform that makes it more automated and easier use and more transparent within the process. So
Yeah,
I
totally.
think that's I think that's a great takeaway. Um, so that's a wrap. So time went by very quickly. But thank you to Reggora for sponsoring this episode of the SIP. And to our audience, thank you for tuning in. I know that you all are trying to re-energize yourself and dig out from your email boxes from being away last week. So thank you for taking the time to join us. We'll be back on Tuesday. I don't remember if it's November the 4th or the 5th. I wrote the 5th, but I think it's the 4th at 2 p.m. Eastern for the TMC members. And then we'll be live at 4 p.m. Eastern on LinkedIn for the broader industry. And also wanted to point out if you all were on very early on the episode, Amy Bohr was still on camera. We're gearing up for Scottsdale and you don't want to miss it. So please join us. You can go to our website, join us for Desert Disruption in Scottsdale, February 22nd through the 24th. But you need to get registered. We're filling up quickly. And also are going to need some RSVPs on some feature things that we are doing. So get registered. Cheers to you all. And until next time, thank you for joining this up. Thank you, Brian. Great
Yep.
conversation.
Thanks for having me. Appreciate it.
Bye.
Bye.